So here's something we hear every single week at Ditto. Hey, I'm planning to buy a 1 crore term plan for my dad. Can you please help? And to be honest, this isn't an odd request. On the surface, it sounds like a caring, responsible move from your end. You want to secure your family's future, and who better to start with than your parents, correct? But here's the thing. Term insurance isn't meant to be bought emotionally, it's meant to cover income loss. And if your parents don't have income, or if they're retired, or if they don't have any active liabilities, then the whole point of buying a term plan for them might not really add up financially. Hey folks, I'm Shashank, you're watching Ditto Insurance. We're backed by Zerodha, rated 4.9 over 5 on Google by over 16,000 customers, and we've helped more than 8 lakh Indians make better insurance decisions without any spam or sales pressure. And if at any point you're unsure about whether you really need a term plan or which one to buy, you can always book a free call with our advisors. The link is in the description. Alright, now let's say you're still wondering if it's still worth buying a term policy for your parent. Let's break it down logically and help you arrive at the right call. So to begin with, yes, you can technically buy a term insurance plan for your parents. They'll be the ones insured and you'll be the nominee. And if anything happens to them during the term, the insurer pays you a fixed sum of money. Simple, that's how term insurance works. But just because you can buy it doesn't mean you should. You see, term insurance works best when there's a clear financial gap to cover. Like if someone earns an income and has dependents who rely on that income. So in the case of their death, the payout helps the family stay afloat. But if your parents are already retired, don't have dependents, or aren't repaying loans, then honestly, what exactly is the payout protecting? That's the first question you need to answer. Now that said, there are some cases where buying a term plan for your parents does make sense. Let's say your dad is still working and earns a decent monthly income. Or maybe your mom supports a dependent sibling or has a loan in her name that's being repaid. In these situations, the absence of that parent would cause financial distress to the whole family, and that's when a term plan is absolutely relevant. But again, there are exceptions, not the default, and even if you do fall into one of these edge cases, the second big challenge is premiums. See, the older your parents are, the more expensive it becomes to buy a policy. Let me give you some context here. Let's say your parent is a 60-year-old non-smoker male and you're buying a 1 crore term plan till age 60. So that's 10 years of coverage. These are the approximate annual premiums including GST. HDFC Click to Protect Supreme comes in at around 85,800. ICICI iProtect Smart Plus around 1,03,000. Axis Max Life Smart Term Plan Plus comes in at around 1,13,000, and Bajaj eTouch around 92,700. Now compare that to someone who's just 35 years old. The same 1 crore cover for them would cost about 28 to 33,000 annually. So in short, you're paying nearly 3 to 4 times the cost without the flexibility, without the add-ons, and with a very high chance of medical rejection. Now that brings us to the third roadblock, underwriting. For older individuals, insurers usually ask for detailed medical tests, treadmill test, ECG, 2D echo, full blood workups. And if there are PEDs like diabetes, hypertension, or high cholesterol, the premiums are either loaded significantly or the application gets rejected altogether. There's also no guarantee you'll get the policy amount you're looking for, and even if you do, you won't get the benefits like critical illness rider, waiver of premium, or disability add-ons. So the policy you're buying is bare bones and yet very expensive. What's our take at Ditto? Well, unless your parents are actively earning or have financial dependence or are repaying a large loan, we don't actively recommend buying term insurance for them because financially the math just doesn't add up. Instead, here's what we suggest. If you're young and earning, buy a term plan for yourself. Lock in low premiums while you're still healthy and secure your family's future. It's significantly cheaper, approval is quite easier, and you can structure it with riders that match your real life risks. Now, for example, if you're 25, a 1 crore term plan might cost you around just 12,000 rupees a year. But if you wait until you're 45, that same plan could cost you 35 to 40,000 a year. And unlike health insurance where premiums rise with age, in term plans, you lock in the rate for the next 30 to 40 years. So starting early really pays off. Now, let's say your parents are in their 50s or 60s and you still want to support them financially. A term plan isn't the best way to do it. Here are a few smarter alternatives though. 1. Get them a solid health insurance plan. Medical inflation is real and this will take care of most hospitalization expenses, especially in their older years. 2. Park some money in fixed deposits or senior citizen savings schemes. These give them regular income and offer safety, liquidity, and peace of mind. 3. If they don't have pension income, consider an annuity plan. It ensures steady monthly payouts without market risks. And 4. Set up a dedicated emergency fund. This could be a liquid mutual fund or just a high interest savings account. But it's a lifesaver when unexpected expenses show up. At Ditto, we've helped over 8 lakh families make these choices, and more often than not, we've seen that a customized mix of health insurance and low-risk saving options give parents much more protection than a 1 crore term plan with zero living benefits. So if you're unsure how to get started or which options suit your family best, book a free call with us. The link is in the description below. It's completely free and there's no pressure to buy anything, and you'll walk away with absolute clarity. To wrap up, yes, buying term insurance for your parents may sound like a thoughtful gesture, but if they're retired, don't have loans, or no one relies on their income, it's often not the right tool. Instead, focus on practical immediate needs like healthcare, emergency funds, and guaranteed income. It's what really matters. Do you still have questions? If so, then drop them in the comments and we'll try to answer them. And if this helped you clear your doubts, give it a like, share it with someone who's exploring this for their parents, and subscribe to Ditto's channel. It's the simplest way to support what we're building here, one insurance aware Indian at a time. Alright folks, I'll see you in the next one. Until then, happy insurance hunting.